Vuole investire $1 miliardo in Hype, la criptovaluta di Hyperliquid. Hyperliquid ormai dovreste conoscerlo tutti, è stato il DEX che ha conquistato il 2025 mercati, volumi, share di mercato e che oggi ha dei giganti di Wall Street che vogliono puntare $1 miliarduccio. Si tratta di somme importanti per un'operazione che sarà guidata da una vecchia conoscenza dei mercati tradizionali che è David Shamis. Lo avete visto da Bloomberg, lo avete visto da CNBC, lo avete visto nelle migliori trasmissioni che si occupano di finanza tradizionale e oggi lo trovate sugli schermi di criptovaluta.it. Prima di passare all'intervista che ti spiega un po' di magagne, arriva fino in fondo perché ci sono delle sorprese importanti. Iscriviti al canale così da permetterci di fare altre interviste di questo livello. Per il resto non ho più nulla da aggiungere, buona visione. Okay, so welcome to David Shamis. He's the CEO of Hyperliquid Strategies. Welcome and thanks for being with us.
Nice to be here. Thanks for having me.
So the digital asset treasuries trend doesn't look like it's gonna stop. We have MicroStrategy, we have Bitmine, we have SharpLink, we have Soulmate in Solana. You started a company betting on Hyperliquid. Why Hyperliquid?
I think that Hyperliquid is pretty exciting and pretty unique. And the reason we like it, you look at, first of all, it was a blockchain built specifically to run an exchange on. It's run many exchanges on, and exchanges for all types of assets in sort of perp form all over the world. And when you look at the different blockchains, Bitcoin to me is like digital gold, and Ethereum and Solana in sort of different ways are about smart contracts and about people transacting real assets on the chain.
Yeah, they are general purpose after all. Yeah,
exactly. But Hyperliquid was really built for trading. It is a blockchain specifically built for trading, and we think it's a pretty exciting thing. And in a relatively short period of time, meaning about 3 years, it's proven it's generating a lot of revenue. Right, yeah. It's being used the way it was expected, pretty effectively, and the token. When you look at sort of the token like a sort of normal valuation metric you might use, because they're using 99% of their cash flow to buy back the token, and that is when you look at that from a valuation point of view, we think it's a very compelling valuation. So everything we look at in crypto, everything we look at in a lot of places right now, but particularly in crypto, feels expensive to us. I don't know where Coinbase is trading right now, but it's at a pretty healthy multiple. And then you have this Hyperliquid thing, which is new, it's exciting, it's growing really quickly, and it's not trading at a crazy valuation level. So it's just too exciting not to pay attention to. And then sort of the flip side of that is, why does it fit into a digital asset treasury company? It is not easily owned at all. So, recently, like last week, Robinhood just listed it. So It's gotten a little easier to own it in the United States right now, but it's still not, it's not an easy one. And who knows how much liquidity there will be in the Robinhood thing. And even in Robinhood, like there are advantages of a digital asset treasury company, as we all know, as Michael Saylor has pointed out to us many times over the years. There's space and need for a digital asset treasury company for the Hype token, and we think we're filling that. We're by far the largest. There's a couple other much smaller ones. We're going to close in a few weeks. I think our shareholder meeting is scheduled for November 18th.
November 18th.
So we will by far be the largest digital asset treasury company for the Hype token.
Okay, there are several interesting things that you announced, because first, Hyperliquid has been the biggest surprise of 2025 in the crypto space. It works, which is something remarkable, because the crypto space is trying to reinvent what traditional finance experienced in the past 500, 400 years. It worked. The market crash of 10 October has been quite a baptism on fire for Hyperliquid. The Hyperliquid work, that's pretty interesting. They have an integrated market maker, which is again a source of income. And yeah, it's not listed everywhere. But there is something weird to me. Wall Street commands higher evaluations of stuff. Example: Circle has basically no revenue. They pay their revenue fully to Coinbase mostly, but the evaluation by the market is pretty high. It's a very high multiple of their profits. When it comes to crypto, it's pretty much different. A question: don't you see regulatory problems for perpetual futures exchange like Hyperliquid? I mean, in Europe, they are basically banned as instrument. I mean, the perpetual futures. In the United States, it's not clear what may happen in the past months. So you're investing in with some regulatory risk, I think.
Look, there is no question, without a doubt. And look, with anything in crypto, you're taking regulatory risk. There's no need to think that you can do anything in the crypto world and say there's absolutely no regulatory risk is kind of crazy. Obviously, there's different ranges of things. But there's no doubt, part of the bull case on hype is that you think perpetual futures are going to become more regulatorily acceptable around the world. And that's my opinion. I think that's going to happen. I think, I don't think we have a new CFTC chairman yet in the U.S. The Senate has nominated. But it hasn't been confirmed yet. We're making the bet that we think the perpetual futures will be, over time, more acceptable than they are now. And look, I personally think they're a pretty smart, thoughtful way to trade lots of assets. And the other thing I think is really important, for a long time, people have been talking about blockchain and talking about how lots of real assets, real world assets, RWAs, as they say in the crypto world, are going to trade on the blockchain. But there haven't been lots and lots of great examples of how that actually is going to work. What's actually going to happen? So stable coins are a good example. They've obviously worked incredibly well. Circle, which, by the way, for full disclosure, I'm an investor in Circle at Atlas Merchant Capital. We were.
I didn't mean to be.
No. By all means, before, by all means, that's what makes a market. Good debate about valuation. I'm not offended at all. But anyway, Circle's on the Ethereum chain. It's on multiple, but that was its original. But it's still not exactly clear what is meant when people say all these real world assets are going to go on chain. And I think perps are a great example of how it could actually happen, how it's already happening pretty thoughtfully and pretty efficiently. So I don't know if you follow this, but a company called Unit has recently listed the NASDAQ 100 in a perp form. And it's actually, they have their own front end called Trade XYZ, but it's also now on the main screen for Hyperliquid. So if you want to trade the NASDAQ 100 in perp form, you can do it now from wherever you are, obviously not from the United States or Ontario, but from wherever you are around the world. A lot of people, don't have access to Robinhood accounts or to Fidelity accounts. You can do it 24/7, and you can do it with the kind of leverage on either side that perps allow. And that's pretty interesting. They're about to add Tesla, NVIDIA, and gold as well. So this isn't now, this isn't just talk, right? This isn't talk about some future where you'll be able to trade equities on the chain. Here it's actually happening, and it's happening in perp form. And perp form is nice because it's a derivative form. You have people on both ends, both sides, right? You have the long and the short side. And you don't have to figure out the complicated things of how are you transferring custody of an asset or ownership of an asset. It's a derivative form when you're on either side. But clearly, the derivative trading will have a real world effect on the underlying asset values.
Yeah, I think that you are going to be at DAT, digital asset treasuries. There are around 200 now listed in the United States. It's obviously a consequence of Gary Gensler going out and Paul Atkins getting in, because the distance between the two, not only in regards of crypto space, is very huge. There is a huge gap in ideology. Paul Atkins probably is more libertarian than Satoshi Nakamoto. He's a very, for Europeans like me, it's a bit unsettling to see somebody so anti-regulation in such a position. It's very cool to see. Do you think though that SEC is gonna really be that open, not to crypto but to instruments like perps, because perps are actually what they used to call bucket shops? It's, I mean, if you want to be a bit,
yeah, I'm not sure I totally agree with that. I think that's a bit of a stretch, but I understand the point you're making.
do you think it's gonna be? I mean, and also, what do you expect if Paul Atkins won't be the SEC head in the future?
So let me make a couple points. One, I think technically, perpetual futures in the U.S. would be regulated by the CFTC, not the SEC. Yeah. Although I think the impression I am getting in this administration is that there is actually pretty good coordination between the CFTC and the SEC. I think in prior administrations, both Republicans and Democrats, you've seen sort of some of the usual turf wars between the CFTC and the SEC. I don't get the impression yet that that's happening here, and I hope it doesn't. And that to me is that's progress in the right direction. But maybe I'll answer your question, sort of regulators in general, rather than just specifically the SEC. Yeah. Look, the reason I like perps is that it allows people to trade high volume, lots of liquidity, and varying amounts of leverage on both sides, the long and the short side. And, on one hand, lots of people casually will say, well, leverage is bad for the system. And, but the flip side of that is, what percent of Robinhood's revenue right now do you think is options trading? Probably a lot, right? A tremendous amount of that is options, and all options is levered equity. And depending on your strike price and on your time to expiry, it sort of depends on how levered it is. But to me, like, if you want to get that kind of leverage, trading options is complicated and expensive. Like you gotta, the bid asks are very expensive, and the trading costs are very expensive with options. And understanding, gammas and all the different math behind options is very tricky. Whereas a perp, you say, I want to go long Bitcoin, or I want to go long NVIDIA or whatever, and I'm going to do it with 3x leverage. That means if the price goes below a certain level, which you'll see on the screen when you put on the trade, you're going to be liquidated out. Like, it's very simple. And it's much cheaper for the ultimate investor to get the same kind of exposure. So I understand, we're in an evolving world and evolving markets, and I understand, people hear the L word and they get nervous when it comes about leverage, and they should get nervous when they talk about leverage. But it's not like it's not happening here. There's a lot of options trading in this world, and that is equity with leverage.
People like leverage, and they're going to find a way. That always happens.
Well, exactly. So I would have thought the job of the regulator is not to stamp it out, but to figure out how it could be allowed most responsibly with the least cost and the least complication to the actual investor. Because in the end, that's what matters.
Look, in Europe, we have ESMA, which regulates maximum leverage for assets. They tried. Yep. They put restrictive levels of leverage. It didn't work. People keep trading outside Europe. They try to buy already leveraged assets like ETFs and such, or leveraged tokens. So you basically can't stop people doing what they love to do. It's
hard to stop, but as a regulator, you can make it easier to understand. You can make it less expensive for the ultimate investor, and that's very valuable. Again, like when you trade a perp on Hyperliquid, it tells you exactly what price, if it goes down or up, whatever side you're on. If the price moves, where exactly you get liquidated out, and you understand that the price of Bitcoin, whatever, is 110 right now, whatever it is, 115. 115. But if it goes to whatever number based on your leverage, and it's very clear. Explain to someone how that works with options. It's just not so easy.
No, it's really hard. I mean, I understand options
and gammas and all sorts of complicated stuff.
The most paid people in Wall Street are people that are very good at pricing options, actually. So, I mean, it means it's very hard.
Yeah, and someone's paying those people, right? They're not getting, they're not being paid for out of nowhere. So
it's very good. Do you plan to participate in Hyperliquid ecosystem? Maybe the automatic market maker, the fund that handles liquidations. What do you think?
Yeah, I think the answer is definitely yes. So let me tell you, absolutely positively, we will be staking the vast majority of our hype. That's simple. And why wouldn't we? We will more than cover our operating expenses as a public company with the staking revenues of the tokens we own. That's the easy one. We're going to own, close to 20 million hype tokens, a little less. We will be thinking hard about the most efficient things to be doing with them over time, and the most thoughtful. And we'll also obviously have some cash, contributing some of that cash to the HLP as a use of sort of cash management makes good sense too. HLP, for those that know, is the Hyperliquid Liquidity Protocol. I think it's called HLP. I think the P stands for protocol, but it's a vault on the Hyperliquid system that provides liquidity to the system. We'll be looking at all that. We are knee deep in the Hyperliquid ecosystem. On the other hand, we don't have a lot of interest in taking significant asset risk. Hyperliquid, the underlying token is already a pretty volatile token. Just look at the last 3 or 4 weeks. It's been as high as 59. It's been as low as 32 or something. I mean, it is a volatile asset. So I'm not dying to figure out how to get more volatility onto the left side of our balance sheet. But we want to be smart about it. If we think we can earn outsized returns with relatively low risk, we will certainly do that.
Now, there is something else. Your company is going pretty slow. I mean, you announced the PIPE, you announced the merge. It's taking time, and that's it. We have seen many companies basically buying shelf companies because they are shelf companies. When a company is listed on Nasdaq and it has nothing inside, is a shelf company, and going straight. Now, it seems that the ECC is looking into some listings, looking for insider trading. Do you think we are going to see some serious reaction from the SEC and FINRA, or?
It's a hell of a question. So let me quickly comment on why we've moved slow. We haven't moved slow because I enjoy moving slow. That's not.
It was a compliment by my side. It was.
No, I absolutely appreciate that, but that might be happenstance. So just so you appreciate, about almost 2/3 of our investors are contributing tokens, not cash. So we found people that already own hype. They're contributing hype to us, and we're giving them shares back. In order to do that in a tax-free exchange, you need to use a structure, a corporate finance structure that requires a shareholder vote in the U.S. So because you need a shareholder vote, you have to file an S-4. It has to go effective. You have to mail out the proxy to the shareholders, and that process takes time. And it's been about 4 months. And as I said, the vote is now scheduled for November 18th. So we've gone slow, again, not because I'm enjoying watching the paint dry here. Our structure, and most importantly, the tax of our structure, tax structure required it. As far as other things go, I have no, interesting knowledge about whether we're going to see insider trading and like that. I will say though, when you do things quickly, you make mistakes. That's in any, not just when it comes to stocks and companies, like in anything in life. When you move quickly and you rush for not so necessarily for great reasons, you sometimes make mistakes. And there will probably be, with all these DATs that have been done, some mistakes that were made because of the speed they were moving. And I don't know if those mistakes will be an accounting problem, or if the mistake will be a insider trading problem. You can trade on inside information by accident. You can literally trade when you're not supposed to and not realize it, but it's still a problem. So I'm not predicting specifically insider trading like that, but I am, there are 200 DATs that have been done, probably the vast majority of them in 2025. Yeah. They've all moved pretty quickly. There will be mistakes that have to be cleaned up over time.
Yeah, that's, our readers asked, we answered that. The listing process, the PIPE, the investing process, there are many people involved. and somebody can use that information to front run others. And we are talking usually about companies who have little volume, basically no market capitalization, so moving the price a lot doesn't take a lot of capital. So
Yep.
it's quite normal. So there are investors contributing in directly in tokens. That's something that we are seeing happening very often. Avalanche Foundation gave tokens to, I think Scaramucci started a vehicle. Solana Foundation gave it to Soulmate. So there is something. Do you think it's going to be a trend? And it looks pretty obvious that the interest of some investors is to get rid of vesting tokens, vested tokens, and such. Is it like that?
Yeah, I would tell you certainly yes. Because generally speaking, the people who are interested in investing in crypto DATs are people who already are invested in crypto. I think almost everyone, if not every one of our investors, had some crypto exposure before they invested with us. It's not like we found people that never didn't know anything about crypto. And generally speaking, people that are invested know a lot about crypto already own some tokens. I will say, our experience, this has taken a while to get done, longer than I originally expected in May when we started this thing, and in July when we announced it. I would expect in some future deals, maybe people won't worry as much about the tax as we worried about. It just depends, right? It depends if your investor base is very focused on the tax issue like ours was, you have to go through this process. If they're not, they don't. On the other hand, I do believe the NASDAQ has come out over the last month or so with some more guidance around contributing tokens. And we have solved that completely because of our shareholder vote. We're already, the thing that they sort of said people might consider doing, we were already doing for tax reasons. But people have to weigh all these things.
Yeah, it's a huge sector, but there are obviously people taking it in a very different way. Even the foundations had very different behaviors. Avalanche Foundation has been pretty transparent about the process. Other foundations have been not that transparent.
Sure.
We are gonna see. So, do you think it's gonna be a multi-year involvement? I mean, no, you told us that it's a vehicle also to make people holding the token going tax-free on the stock exchange. Do you think it's gonna last, or they're pretty
do I think our digital asset treasury is gonna last?
And in general as a trend?
So the answer is yes. I think inevitably, because as you say, there's 200 of them, and that number is probably going up before it goes down. There'll be a lot, and there'll be a lot of different ones that trade at different multiples. And I think that, ones that are trading at discounts to NAV, I could see being merged into ones that are trading at premiums. In the end, like every public company requires a CEO and a CFO and public reporting, and there's actually some significant cost to being public. So, if you are a 20 or 30 or $50 million DAT, at some point, some of those costs might overwhelm you, and there'll be a synergy in merging whatever a $50 million one into a $1 billion one, or whatever the numbers are. So I think my guess is over time the numbers will go down through consolidation, and that's okay. That's a normal business thing that happens in lots of places. I don't know when we'll peak. It certainly seems like there's still more getting done, as you talked about earlier. So my guess is sometime in 2026, the number of DATs will probably peak, because we're not going to keep doing new ones every day forever. And then over time, you'll see some consolidation. But I don't think either either one is going to be an extreme thing anytime soon. It's not like we're going to go from 200 to 20 in a 1 month period. Mainly because a lot of these DATs, Bitcoins, the Bitcoin ones don't have any real staking income, but the other ones do. So, as I said before about ours, we're going to have more than enough income, more than enough revenue from our staking to cover our operating expenses, quite easily. So there's not going to be any sort of burning cash problems or cash needs to be doing something soon. So, I think these will be around for a while, and based on where they trade and how they perform, we'll base really how long we'll be talking about this.
Yeah, look, a couple of months ago, I was talking to Matthew Siegel of VanEck about this matter, and he told me, look, there is no reason to be worried because the ones that will go under the MNAV will basically be acquisition target by the other ones. And it's gonna be, I'm gonna add, it's gonna be probably a trade similar to the Grayscale Bitcoin Trust. Do you remember that it was trading with a huge negative premium? People bought it, waited till it got an ETF, and then they made a lot of money. Probably people should be looking at the ones trading under the MNAV, because in case of merging or acquisition, probably that gap is gonna get closer.
Yeah, and look, as you said before, there's a lot of these. There are 200 of them, so you're going to see all sorts of people do all sorts of things. I have heard that there are plenty of DATs that are doing some aggressive things. I consider to be aggressive, whether it's selling calls or selling puts on their tokens. Look, if you're a Bitcoin DAT, right? Bitcoin doesn't have any staking yield. You got to figure out how you're going to pay your expenses, right? Because there's a cash cost of being a public company. Obviously, you can sell your Bitcoin, but nobody wants to sell. So, you sell calls or you sell puts, you generate cash. But, selling calls or selling puts is not riskless, right? If Bitcoin goes up a lot and you've sold calls, you have to explain to people why you don't actually get the benefit of that rise. Or if you sold puts and Bitcoin goes down a lot, and again, this is volatile. We all know what happened 3 Fridays ago, whenever it was, 2.5 weeks ago.
2 Fridays ago.
Yeah. If you sold puts, you can have to come up with a fair amount of cash, or even if the value of Bitcoin goes down on the way, you might have capital calls to put up collateral. So, again, there are 200 of these, as you say. So there'll be all sorts of stories with all sorts of people doing, as we said before, I don't know if it's insider trading, but people making mistakes, people doing things they wish they hadn't in the fullness of time. And that's what makes the world interesting, right? They're all going to be different. Some will do great. Some will, sell calls and everything will go up afterwards and they'll be thrilled, or some will, do things that will go work in the wrong direction. And as market participants, we'll all be following this stuff and learning from it.
That's going to be very funny to me, because I've seen ETFs becoming a passive strategy vehicle. Now they integrate in ETFs whatever strategy it exists. Now we're going to see listed companies become a proxy for very complex strategies, like you say. I mean, holding the asset and then selling options. That's what I love about the United States. I mean, your financial engineering and fund, I don't know if I should say, you're very creative with financial instruments, and I really appreciated that. So good luck for your enterprise. We are going to follow it. We hope to see it listed by some European brokers. They are usually.
That would be great. That would be fabulous.
I thank you for being with us. You have been very clear. You answered also to questions I wouldn't expect an answer for.
Good.
That's very nice. Thank you, and good luck.
Great. Well, I love Italy too, especially the food.
Even the people are worse. The food is better, right?
Oh, the people are nice. Come on, people are nice. The food, Italy's wonderful.
Whenever you come by, give us a call. We are going to host you if it's possible.
That would be great. Thanks for having me on.
Thank you, David. Thank you, and good luck.